Another crash, another lie. Here's the truth they will not tell you. They said it was the end. Again, tariffs, market crash, panic everywhere, stocks tanked, crypto bloodbath. The news is screaming recession and CNBC rolled out their doomsday ticker. But just a few days later, markets are green. Trump paused the tariffs, NASDAQ popped, and the S&P 500 had its best single-day rally in history. How many times are we going to do this dance? How many crashes will it take for you to realize that the game is rigged for panic and built for patience? Today, we're talking about something way bigger than a tariff or a temporary dip. We're talking about why this generation, Millennial, Gen Z, and Alpha, have been hit the hardest, why the rules feel broken, and how to actually build wealth through the chaos, not in spite of it. My name's Karim and welcome back to the Crypto Code by ICN Talks. Trust me, you're going to want to watch this entire video. You cannot afford to miss this. The world has changed significantly over the past 50 years. Stay with me and hear me out. The richest 400 Americans, that's 0.0001% of the population, own more wealth than the bottom 60% combined. In 1980, the top 1% of earners made about 10% of national income. Today, it's over 20%. Since 1978, CEO pay is up 1,460%. You know what worker wages are up? 18%. That's not even beating inflation. In the 1970s, the average home cost less than 2 times the average household income. Today, it's over 5.6 times, more than double. Back then, most college graduates had little to no student debt. Now the average is around $40,000 per person. We didn't just raise prices. We shifted the burden of the entire economy onto the individual. Young people are not irresponsible. They're playing a game where the rules were quietly rewritten. Home ownership, debt-free education, and climbing the economic ladder used to be the baseline, not a privilege. So maybe the question isn't why are people struggling? It's who decided this was acceptable. And you feel that. You feel it when rent eats up half your salary. You feel it when your grocery bill somehow doubled in 2 years. You feel it when it takes a second job to just survive. And investing feels like a luxury. This isn't capitalism anymore. This is extraction. This is the game board tilted at a 45-degree angle and society is forced to climb uphill while the top coasts down. But here's the kicker. Every time the world feels like it's ending, the biggest transfer of wealth happens quietly, from the panic sellers to the patient buyers. The Western world and Donald Trump are proof that capitalism can spiral quickly into greed. What we saw in the markets after the tariff announcements is yet another example of how enormous wealth gets transferred from ordinary people to the wealthy. You ever feel like we've been here before? Because we have. .com crash in 2000, hype, euphoria, and then a brutal crash. Amazon dropped over 90%. Everyone said the internet was a fad. Today, Amazon runs half of the world. Then the global financial crisis in 2008. That's when I graduated university. Subprime mortgages, credit default swaps, Lehman Brothers. The whole system collapsed. People were literally pulling money from ATMs thinking it was over. But the S&P 500 is up over 600% since then. And COVID, 2020, global shutdown. Oil went negative. People were disinfecting bananas. The stock market dropped 35% in 1 month. Then, the fastest recovery in history. And what about the FTX crash in 2022? Crypto is dead. Bitcoin is dead, they said. But the builders didn't stop. And fast forward to now in 2025, the biggest funds in the world are allocating to crypto infrastructure. And here we are again today, the tariff crash of 2025. Markets panicked. YouTubers hit you with sell everything. But then, Trump hit pause. And markets shot back up so quickly. Trump even posted, "This is a great time to buy," right before pausing the tariffs. You cannot make this up. Every single time the fear feels real. Every single time they say this time is different, but the story's always the same. Short-term pain, long-term gain. The question isn't, will the market crash again? The question is, will you be ready when it does? I'm not saying ignore the noise. I'm saying zoom out. Let's take the S&P 500, the 500 largest publicly traded companies in the US. Since 1957, it's returned about 10% annually, even including every major crash, every war, every panic. The direction is up and to the right. If you had put $1,000 into the S&P in 1980, you'd have over $100,000 today, and that's without doing anything fancy. Why does this matter? Because wealth isn't built during the peaks. It's built during the crashes. When everyone else is selling, the winners are planning. And that mindset, that patience, it works in crypto too. Crypto is a magnified mirror of traditional markets. It's faster, it's more emotional, and it punishes tourists. Let's talk about the cycles. In 2017, Bitcoin hit $20,000. Everyone thought it was going to $1 million. And in 2018, bear market. 85% drawdowns. And what about 2020 to 2021? Stimulus money, NFTs, ETH to $4,000, dog coins to the moon. Then 2022 to 2023, regulation, FTX collapse, Luna, contagion, a full reset. Then 2024 to 2025. And now institutions are here. RWA tokenization is exploding. Crypto gaming is about to become its own economy. AI is merging with smart contracts, decentralized infrastructure. And you're still early. The entire crypto industry, Bitcoin, Ethereum, and every single project is worth less today than Nvidia. One stock. Right now, in April 2025, the next bull cycle is being built quietly by people who are thinking long-term, tokenizing real estate, building decentralized AI, creating Web3 game economies that will onboard millions. So don't chase pumps. Chase fundamentals. That's what we do here on Crypto Code. By the way, if you're liking what you're hearing, then let us know by smashing that like button and subscribe to the channel. Crypto moves fast, so make sure you ping that notification bell so you don't miss the next video. Here's the part nobody likes to hear. You're either managing your emotions or emotions are managing your portfolio. I've panic sold before. I've been on the wrong side of crashes. I've watched green turn to red in 30 minutes and felt that sinking feeling in my chest. But here's what experience teaches you. Number one, panic is not a strategy. Number two, fear is not a forecast. And number three, FOMO will bankrupt you faster than a bear market. So what works? Number one, invest only what you can afford to lose, seriously. Number two, zoom out. If you don't plan to hold for at least a few years, you're trading, you're not investing. Number three, know why you bought something. If it drops 50%, will you understand what you own or will you sell it out of fear? Number four, stick to fundamentals, teams, tech, adoption, cash flow, and roadmap. Number five, diversify. One hot token won't change your life. A balanced approach just might. And remember, this channel isn't just about coins and charts. It's about giving you the tools and mindset to build a real meaningful portfolio of projects with fundamentals, building real tech that will be here for the long run. Let's pull up the screen and let me show you exactly what I mean so that you can learn to master your emotions and make fundamentally better investing decisions. All right, guys, I wanted to show you ICN.live. It's our flagship ecosystem product, a brand new and fresh Web3 news platform that we have built just for you, where you'll find articles in gaming, AI, blockchain, and of course, Bitcoin. It's an excellent resource to stay up to date with the latest news. Do join our Telegram. You just go to the bottom and you can find it here. Click on it and join the Telegram so you get all the latest news right away, including when we upload our latest episode. So go check that out. For today, I'm going to open up this article talking about what we're discussing in this video, which is Trump's tariffs, what it's doing to the market. So market rally after Trump's tariff pause drives Bitcoin volatility and ETF outflows. On Monday, the surprising pause on proposed trade tariffs led to a broad market uptick. Stocks surged. Risk assets, including crypto, saw renewed investor interest, but Bitcoin's price action told a different story. The whole point of this video today is to show you that we're going to have crashes along the way. It's about zooming out. It's about how to manage your emotions. And I'm going to show you different tools and ways to maintain that mindset so that we figure out, how to play the game. Because right now there's a big disparity between how the rich are playing the game versus everyone else. And so that's the point of today's video. And we'll start to go through that. And with that in mind, the first point I wanted to show is this chart. I absolutely love this chart. You'll see the S&P 500 since, let's say this is from March 2009 all the way until today. And if you look at, by zooming out, you'll see that it's just going in one direction. It's going right and up, right? Even though along the way we had major news, that came out that was saying it was the end of the world, everything's going to crash, it's all dead. For example, here we had Chrysler and GM filed for bankruptcy. When that happened, the markets crashed because you had these two behemoth automotive companies go bankrupt. They had no more money. So everyone thought the world was over. But look, over time, it went back up. Then we had the BP oil spill, for example. That was another doomsday scenario where the world is getting environmentally friendly oil spills. It's just a disaster. Again, it crashed, but then it went back up over time. So the point is, we had so many different crashes along the way. If you look at, let's say, if you look at COVID, March 2020, look at this drop right here. The fastest bear market ever. The economy shuts down. Everyone thought the world was over, but what happened over time? It slowly went back up. It slowly went back up, and patience wins the game. That's the whole point of this. Patience wins the game. Okay, so this is a great way to kind of zoom out and see that yes, we're gonna have crashes along the way, but if you zoom out, they're very small in the grand scheme of things. Okay, the S&P 500 has always been very strong. It continues to outperform. We also in crypto believe the same thing with Bitcoin because it is the only asset out there that has a fixed supply. Right? There's no inflation. It's a great way to hedge against inflation in general and against fiat currency. So that's what I wanted to show you today. Also moving on, so S&P 500. If we look at the chart and we look at over the past year, it's still up 2%. Yes, I mean, since Trump came into power, since he announced his tariffs, it's been an absolute bloodbath. And what we can see here is, let's say it peaked on the 18th of Feb, and it drew down all the way down to here. This was the biggest crash when he announced the tariffs on the 2nd of April, and it went down for 2 consecutive days, like 3 to 5% every single day. And the markets reacted really bad. Like everyone was taking their money out of the markets. They thought it was over. And even when I was talking to my friends who have invested into the markets, they're like, oh my God, I'm down 40%. I'm like, yeah, but that's unrealized. Like, don't sell. If you sell, then you're going to realize those losses of 40%. If you don't sell, those are unrealized. So that's the whole point. You need to just wait it out because it is unprecedented territory. Trump is a wild card. You don't know what he's going to do. And then what happened? He tweeted, well, he didn't even tweet. It was on his Truth Social. He said, we're going to pause the tariffs for 90 days. And what happened? It shot back up. Like, I think it was one of the best days in the markets ever. And before that, we'll talk about it soon, but like this is the whole point, right? So if you look at 1 year, we're still up almost 2%. Yes, if you look at from January to now, we're down 10.76%. For 5 years, let's look at 5 years, still trending upwards. Look at all time. Like this looks like the Bitcoin chart. Look, it's just trending upwards. And then if you look at these little crashes, they look so small when you zoom out. That's the whole point of this video. It's about patience. It's about understanding macroeconomics to some extent. And we're here to help you with that. We do all the research with the team. So please do subscribe and stay informed because we will give you all the latest market news and will help you manage your emotions and let you know that things are going to be okay. Moving on, the VIX index, again, is another way to look at panic in the market, to look at uncertainty. In 2008, the higher this goes, the more panic there is in the market. In 2008, we saw that, right? So that it spiked up here. Again, in 2020, it spiked up. And then with the tariffs, now it's spiking up again. So this is a great way to kind of stay ahead and look at what's happening in the market. So this is what a lot of investors are looking at. Okay, so the trade wars, the tariffs. I lived in China for 10 years, okay? So I've worked in trade. I have exported from China to the US. I have exported from China around the world to the UK. I understand how tariffs work. I understand the taxes and duties. And to be honest, if I'm being completely honest, China has been playing a little bit unfair. There's a lot of things that don't exist in China. And there's a lot of tariffs that do come in on imports coming into China. So I would say there is an imbalance. But what Trump is doing, obviously, is like, cranking it up all the way, and I don't think that's probably the right way to do it. However, I do understand his point, specifically with China, not with the other countries, but I understand what's going on. But these are, there's a lot of memes now that I found that are really cool. So like, trade wars are easy to win, and then all the arrows coming back, the market's crashing. I think even the bond market was getting hit very bad. That's what prompted Trump to kind of like, to go back on his plans, because usually when the markets tank, everyone flocks to the bond market. But this time it didn't happen. And like everyone was like, oh, whoa, something's really happening under the hood, below the surface. If that's usually not the case, like how come the bond market is also going down? And in that case, I think we're starting to see the cracks of the American empire. And I've been talking about that a little bit, but it's interesting to see like how Trump and capitalism has really taken this greed to the next level. And we'll see if this all plays out and how it's going to play out. So moving on, this AI video has been going around, like, how Trump really wants to bring manufacturing back to the United States. But like, is that really what they want? Like, do they want to be, having their people make clothing or like manufacturing, the stuff that China has become really good at? And I guess, if automation and robots are going to be the way forward, that's still going to take a lot of time, right? So the idea is Americans have prospered with importing cheaper Chinese goods because they were able to brand them, able to sell them and scale them throughout their markets and beyond. And that there is a benefit to that. So we can't just say, bring manufacturing all the way back to the US, because it's going to take a lot of time. It's going to take a lot of money. And do people actually want to do these jobs? That's another question. And then moving forward, so this is clearly becoming a trade war between the two most powerful nations in the world, China and the US. Xi Jinping is not holding back. He is going head to head with Trump. China over the past 20 years has surpassed the US in so many metrics. It's really incredible. I think people are now starting to wake up and see just how big China has gotten over just the past 20 years. It's fascinating. And then I also wanted to kind of later on in the video talk about how, yes, China has really rose the ranks and built a huge economy. And the US has transferred wealth from the middle class all the way to the rich, and we'll talk about that as well. So there's a huge disparity happening between the two biggest countries right now and the biggest economies right now. Moving on, this is insane. I mean, right before Trump paused the tariffs, he Truth Socialed, he tweeted this: "This is a great time to buy," in all caps. Like, why would he do that? So Trump front ran his own announcement to pause tariffs by saying it's a great time to buy 3 hours before huge news for stocks hit. This is levels of insanity we've never seen before. It's never a boring day with Trump. So, oh my God, Donald Trump's audio was caught in this video explaining that his billionaire friends made billions yesterday with tariffs and stock market manipulation. The SEC needs to investigate. This has become the biggest theme across X. You have senators and Republican and representatives of the House all, speaking on their platforms saying that this needs to be investigated, because clearly, again and again, the billionaires and the ultra wealthy have insider information that we don't have. Unfair, but that's how the game plays. And again, if we manage to learn how to control our emotions and we didn't panic sell at the bottom of that crash, we'd be good by now, because it's gonna all come back up. And maybe if we bought during the panic, which is another thing. I mean, if you look at the fear and greed index, when there's fear, that's when the rich are buying, and that's unfortunately when the rest of the people are selling, and they end up getting these assets at a discount. Elizabeth Warren again is calling for an investigation into this. Did Trump help insiders cash in on his tariff flip-flopping? It sure looks like corruption. And by the way, this is bipartisan. Like, even the Republicans are discussing this. I guess it's the Republicans who didn't manage to benefit from this. All right. So we had 2 days of bloodbath and just disasters in the markets. As soon as he paused the tariffs, the markets did a complete U-turn. Over $3.5 trillion added to the US stock market in like 1 day, which is just insane. It's like, I think, one of the biggest spikes in a day in a very, very long time, in decades. So, I mean, it just shows you that the power of the president of the United States, the power of Trump being able to not even like officially go on his desk in the Oval Office and like say this to the news. He's actually just tweeting it on his own social media platform. And that power to just tweet that it's going to pause for 90 days adds $3.5 trillion to the US stock market. I mean, what a time to be alive, right? All right. So moving on. This is why I want to talk about how the wealthy are playing a game that we need to figure out and learn how to also be part of this game, okay? Because the pain is real, all right? So in the 1990s, the wealth gap between the top 1% and the bottom 50% was only $3 trillion. Still big, but it was only $3 trillion. Now, the gap is $40 trillion. That gap is getting bigger and bigger over time. And I want to talk about how this is affecting you, your brother, your sister, this generation of millennials, Gen Z, Alpha, our kids' kids are all going to be affected by this, because our parents and our grandparents actually had it good. And I'll talk about why. Moving on. So the wealth gap isn't widened by a lack of government handouts. It's widened because of them, because of the government. Government handouts boost consumer spending. Spending inflates prices. Profits flow to corporations and asset owners. The rich get richer. The poor get priced out and taxed by cost-push inflation. This is mind-blowing. And, ever since Trump got into power and talked about the tariffs, I've really been getting into economics and macroeconomics. And if you look at what happened in COVID, there was 800 billion pounds, let's say in the UK, or $1 trillion in the US when they did quantitative easing and just, printed money. But if you think about it, that money basically went to the households who were then, using it essentially to pay their rent or pay their mortgage, right? They didn't pause mortgages during the time of crisis. They actually gave people money. They printed money, which is actually debt into the government, which is debt to the society. And then they gave it to the mortgage holders, who are who? The banks, the wealthy. So again, we had a huge transfer of wealth during COVID from the very rich back, from the banks, from the governments, from lending, all the way back to the rich. So it was a huge transfer of wealth, and that's why we're seeing this gap widen even more. Moving on, I mean, everyone's talking about this, Robert Reich as well. America's wealth gap is now more extreme than it's been in over a century. Until this structural problem is remedied, the American economy will remain, perilously fragile. This is a great video. I mean, if you look at who stands around the president, who's voting, who's helping with the presidential elections, who's kind of like sponsoring them, it's all billionaires. There's 800 billionaires in America right now, and they control a lot of the economy right now. So that's something that keeps getting bigger. So the top 1% of US earners now hold more wealth than the entire middle class. This actually just, the crossing just happened this year. So it's been a problem for a while. Since the 1990s, it's been getting worse and worse, but we're officially there at that point now, where the top 1% have more money than the middle class wealth. And that was never the case previously. Okay, so what does that mean? It means the richest 0.1% own 17% of stocks. The richest 1% own 50% of stocks. The bottom 50% own only 0.7% of stocks. Repeat after me, the stock market is not the economy. It's a place for the rich to get richer. All right? All right, so this is just another way of showcasing that exact point. The wealth gap is getting bigger, and we need to figure out how to push our governments to be mindful and supportive of the next generation so that we don't fall into a bigger trap and more debt onwards. So what does this all mean for the crypto markets? It's been obviously it's been a bloodbath since Trump announced the tariffs. But to be honest with you, I think Bitcoin did quite well. Yes, it went down to I think $75,000. But in the grand scheme of things, it's in my perspective, it's digital gold, and I think over time people are going to realize that more and more. Gold has been doing fantastic. I mean, gold. If you've been holding gold for the past 4 years, you've been banking. It's been doing so well. I feel like that's going to be the narrative moving forward. I think Bitcoin is the greatest digital asset there ever is and ever will be. But then again, there's a lot of potential now in these alts, right? And let's talk about it. So this is kind of the market, what's going on over the past week. Over the past month, it's been just red. And then let's look at the greed and fear index. So it's been at 21. Again, I've been preaching on this channel for the longest time. The time to top up, or DCAN, is when there's fear, and then the time to take out some profits is when there's greed in the markets. All right, so moving on. This is the watch list. This is what I wanted to give you today, and we're going to put the links for these watch lists so you have access to them, or you can just pause the videos and see what we're talking about. The watch list we have are the OGs. So these are the Bitcoin, Ethereum, XRP, BNB, Solana, Dogecoin. In times like this, it's time to it's great to zoom out and look at the potential opportunities, because these 2x's, 3x's, 5x's, this is when these can happen, right? If you look at Bitcoin, and if you've seen my previous videos, you've seen from all-time high. I love to put from all-time high because it shows us the opportunity when the bull market hits again and we see higher prices, right? Record prices all over again. So like Bitcoin hitting 150K, for example, if it hits at the end of the year, that's possible. But for Bitcoin just to hit its all-time high all over again is a 25% upside, right? Ethereum, it's not been doing that well this cycle, but 68% from its all-time high. XRP, 48%. So you can see here, the potential of how low it's gotten and the potential of how high it can potentially go in the next bull market. So that's the OGs. Okay, great. Let's move on to gaming, because I feel like gaming is going to be a huge one. We have a video coming out about Gunzilla. Go check it out. But it's definitely a huge potential because they're rewriting the rules. They're rewriting the way we transfer digital assets, we transfer money, we transfer gaming assets. It's all coming. It's just the games just have to get better. That's it. All right. The games have not been great. They will get better. And then once we see the big titles, the AAA games, start implementing ways to interact with currencies and NFTs, we're going to see a huge adoption into it. Okay. So let's look at the gaming coins. We talked about this before. Immutable, IMX, 96% from its all-time highs. Sandbox, 97%. Like all of these are like 85 to 90% from their all-time highs. Gunzilla, 60% from its all-time high. Remember, the dot-com crash, Amazon went down by 85% during the dot-com crash. Look what happened 10 years after that, or 15 years after that. It now is like it's the top 10 stocks in the world. It's like $1 trillion company. So that's the point I wanted to make, is that these are real companies, real fundamentals, real projects building, and they're getting mass adoption. And I want to show you that gaming, AI are all going to be strong narratives. So let's go back into AI. We have Near Protocol down 90%, FET down 87% from its all-time high. Guy, like the potential here is like 5 to 10x, you know? So like obviously not financial advice and it's all risky, but I mean, how much lower can it go, right? That's the point. So even if putting in a small investment could be game changing. All right. So that's what I wanted to show you guys today. And that's kind of the scenario that's happening and what's happening in the markets. Hear me out and let me leave you with this. The world is changing. It's getting harder for the average person to get ahead, but that doesn't mean it's impossible. We cannot control the markets, but we can control how we respond. We can stay informed, stay patient, stay grounded. And here's the good news. You're not doing it alone. The team and I are here doing the research and giving you all this information for free. We'll continue adding projects with strong fundamentals to our watch list, including AI, gaming, and RWA. Not hype, not pump and dump plays, but real builders solving real problems. Make sure to join our Telegram group to get the latest updates on market moves and to never miss our newest videos. We'll leave the links below. So make sure you stay informed, stay locked in, and let's keep decoding this crazy financial world together. Because when the next crash comes, and it will come, you won't be the one asking what just happened. You'll be the one who's ready. If you made it this far in the video, thank you. See you next week.